Everyone wants to catch the next big runner, but most traders chase and chase and chase and lose and lose and lose. Learn how to ride multi-day breakouts the smart way. Listen, I did it back when I was starting. You see these big movers, they get mentioned in chat rooms, they get mentioned on Twitter, big breakout, you buy it, instantly reverses. And it's a cycle that I think almost all new traders go through because a lot of these stocks spike, pull back, respike, pull back, respike. I mean, today, literally today we're recording, CYCC is a great example of that. It started out in the beginning of the day at like $4, went to 16, pulled back, halted down, and as of like right now is back at the day's highs. Now, you look at that, and that's exactly what I'm talking about. Instead of buying the top, it takes patience, it takes discipline, but you can wait for pullbacks on these really hot stocks and not end up always buying the top. Let me know in the chat. I mean, is that you right now? You see these stocks, whether it be on a scan or mentioned somewhere, you buy, and it always seems to instantly reverse and stop you out. So let's talk about how to fix that. So what we're looking for is a multi-day breakout, a stock that's proven itself that has the potential to continue through the day and not be just what we call a one and done. Now, one and dones are fine if you're really disciplined in your trading and you're not looking to catch the whole move. But what we're talking about here is trying to capture a bigger move. So we want to look for those confirmed multi-day breakouts. We want high unusual volume. Now, what we look for that is the 60-day average volume. What's great about the 60-day average volume is it's not looking back months, years, decades. It's looking at recent history to show you that whether or not this stock has the potential to be that former runner. Now, when we look at the 60-day average volume, a lot of these stocks, you'll see 10,000 shares, 100,000 shares. So what we're waiting for are extreme multiples of that average volume, 10x, 100x. I mean, sometimes it can be as much as 1,000x. Then the other thing that is absolutely key to catching these big pullbacks on stocks like CYCC is float rotation as well. Now, everyone always asks me, what's the cutoff for low float? The traditional cutoff is less than 10 million. But at the end of the day, lower the float, the better. I mean, again, I know I keep mentioning CYCC, but puny float on that stock, great volume, and that's what creates all of these multiple legs to the upside. The other thing is a catalyst. I know occasionally no new stocks run. It happens. But what we're looking for in trading over time, looking to whether you're trying to just grow your account or your goal is a daily paycheck, we're looking for repeatable setups. So when it comes to that, no new stocks, sure, they occasionally happen, but I like to refer to them as outliers. And are you going to consistently build your account or consistently, get income from the market with outliers, something that happens once a month, maybe twice a month? We want to look for stocks that have a reason behind the move. Now, the delineation there with these day trades is we go back to 4 p.m. the previous day. Basically, when the market closes, we're looking for a catalyst post that time frame. So, and a lot of you guys know this, after hours, a lot of press releases, but the stocks typically spike and die. People that chase get wrecked. People that follow through on the next day can do really well. That's where that morning fader comes in as well. So look for a catalyst from 4 p.m. the previous day into real time. Like it could be a press release that just dropped 10 seconds ago. So now we've got all of the criteria we look for. The next thing we're looking to do is to actually chart out that stock and see if this has the potential to just be a one and done or a high quality multi-day breakout. So we do that using the 1 year chart, 1 year, 1 day. I like to call it the big chart. So you go back and you look, is this stock, above support levels? Is it butting up against a resistance level? You want to avoid buying right at resistance. That's chasing. What you want to do is buy at support and risk a breakdown of support. So if it pulls back to that level, that's the buy. If it falls through that level, hits your stop, you move on. What everyone wants to do is buy at resistance, and they keep getting stuffed, as we say. It's that stuffed move, because guess what? You bought right at a resistance level. Drop your lines. Map out these charts, okay? Technical analysis takes time. It is a learned skill, But I think the best way to do it is just start by doing it. Start dropping lines. Just a quick story. Back when I got started, I'm an old guy. You can see the gray in my beard. Back then, I probably had a stone tablet. But I love to do stuff physically. Like when I got started early 2000s, I would print out charts and literally mark them up with a Sharpie and a ruler, kind of trying to map out those support and resistance levels, and then go look back and look at that chart at the end of the day. And as I kind of started to get better at that, I started getting pretty good. Oh yeah, this stock bounced on this level. This stock rejected this level. So do that work to get better at it. And then when it comes to actually, trading these stocks, etc., once you have those levels, multi-day breakouts above resistance levels, holding support. When resistance breaks, it tends to become support. Instead of chasing that vertical move, you're going to be looking for those pullbacks to those resistance or support levels for your buy, and then you're going to sell into the resistance level. So let's kind of extrapolate that out. What you're doing now, buying at resistance, selling at support. You should probably be short in that move, by the way, but most of you are long bias. Instead of doing that, wait, be disciplined. Force yourself to be a real trader and let the stock play out. So now, buy at support, sell at resistance, partially, okay? With these stocks, CYCC, good example. You can go back and look at that chart and, had 3 or 4 runs today, and it's only 2 p.m. I mean, it might still keep going, but every single time it ran, it stuffed at resistance, pulled back to support, and made a second leg. So all the chasers literally all day today, losing money, losing money, losing money. The people that were patient and traded this way instead, making money hand over fist because they weren't chasing, they were waiting for the stock to set up. So that's the way we do it, okay? And one thing I like to say, chasers always get wrecked. I know I'm an old guy, but that's kind of that internet terminology, REKT. It never works. Well, let me rephrase, occasionally. And this is where people fall into bad habits, because occasionally chasing does work. You buy some stock, soon as you see it mentioned somewhere, and it explodes higher, and you suffer from basically survivorship bias. You always remember that one chase that worked, and you forget about the other 99 times you did the exact same thing and lost money. If you flip the script and do the exact opposite of what 90% do, that's what puts you in the 10%. Now, maybe you've heard that, maybe you haven't. The common parlance is 90% of traders lose, 10% win. And then when you think about it, if that's true, go across the entire population, 8 billion people on the planet. If only a small population succeed at this and the masses fail, well, then the best thing to do is to do the exact opposite, right? Because it's just the law of averages. So start doing the exact opposite. Instead of being impulsive, not having any discipline, refusing to wait, not charting out your levels, not using the multi-day chart, not using all 3 time frames, the 2-day 5-minute, the 2-month 15-minute, and the 1 year 1 day. Now start doing that work, and that's what separates you from the pack. So that being said, my friends, are you going to fix that chasing? Let me know in the comments. I mean, at the end of the day, I made a video the other day and I used this same analogy, but it's a lot like the alcoholic. I mean, so many people will say, this is the last time. You wake up with that wicked hangover, never drinking again. And then all of a sudden you see them the next weekend and they're bombed out of their brains. And you're like, hey, what happened on Monday morning? You can make that choice, I'm not here to do an AA meeting, okay? Make your choices. But with trading, with chasing, it's kind of the same idea. You can make a vow today. I'm never going to do it again. I'm going to be patient and I'm going to wait for the stock to set up. And if I miss a play, so be it. Wait an hour. Wait till the next day. Discipline pays over time. So let me know in the comments if you're going to quit chasing. Now, last point I want to make. When it comes to technical analysis and interpreting the news and figuring out float rotation, all of these things I touched on. I know it's a short video. There's only so much in-depth I can get into, but this is the type of stuff I do every day in the Daily Income Trader system. Multiple live webinars a day with me and other mentors doing it live. So if you really want to master this, I'm happy with this video. We went over a lot, but it's a 10-minute video. If you really want to absolutely master it, check out the Daily Income Trader System. There's a link below. You'll be able to see a free webinar where we do it live. You can see exactly what we do. If it's for you, you can join me every trading day.